And now, since early that year, Bitcoin is basically back, and it looks like we've seen the lows. It looks like we are in a new cycle, at least a nice bounce or a recovery. I wouldn't be surprised to see Bitcoin recovering to 1,000, maybe even 50,000. If it does the same like in 2019, after the bear cycle that started in December 2007, which took Bitcoin down from 20,000 to $3,200, also a devastating bear market. But then Bitcoin quickly recovered. Starting in March 2019, it went up 350% in 3 months. So we could see something similar over the next few weeks and months, Bitcoin recovering towards 35,000, 50,000.
In today's episode, our guest is Florian Grummes, who has over 2 decades of experience in financial markets and is a technical analyst by training, said that he is particularly concerned about on-ramps and off-ramps for Bitcoin. Before going further in this video, make sure to hit the subscribe button for more recent updates about digital assets. As the Securities and Exchange Commission cracks down on cryptocurrency exchanges like Kraken, the main threat to Bitcoin remains regulation, according to Florian Grummes, managing partner at Midas Touch Consulting. After a rough 2022 in which Bitcoin lost 64% of its value, the coin experienced a rally in 2023 and is up 31% since January 1. St. Grummes, using historical data and technical analysis, forecast that this upward trend would continue and that Bitcoin could reach as high as $50,000 this year. Bitcoin price performance may encounter a new magnet above the $50,000 mark if gold continues to be a trendsetter. As the debate over how much Bitcoin will compete with gold remains, bullish price takes are surfacing. Bitcoin is also closely correlated to equity markets and in particular, the tech-heavy NASDAQ index. The NASDAQ is up about 16% year to date. Bitcoin has outperformed the index and is up 49% this year.
So I think it's the wet dream of the Bitcoin maximalists, and there's really the potential there, but I think it will also take decades. And we will have to see how this is all playing out. As I've said a few times last year, the main threat to Bitcoin really is regulation. They cannot stop the network itself, but if it's forbidden to send certain amounts of money to exchanges, there will be not enough people to buy it, and then it's going to move underground. And I don't know how long it will take, but it could take, yes, a few decades from here. We could see a totally different setup if there is no trust between the big nations that basically ruling the planet.
As Cointelegraph reported, the correlation between gold and Bitcoin is now practically 100%. Outside of momentary reactions to geopolitical events, you think gold has been leading Bitcoin for 4 years? A common argument among so-called Bitcoin maximalists, those who promote Bitcoin as the only true digital asset, is that Bitcoin will become a reserve asset in the future due to its scarcity and decentralized network. Bitcoin maxes claim that central banks around the world can use Bitcoin in a manner similar to how gold was employed during the gold standard. To affirm its status as money, Bitcoin will have to obey the laws of time preference. In other words, its current relationship with interest rates must change, so that rising interest rates reflecting fiat currency's loss of their purchasing power should become reflected in rising values for Bitcoin. The current regulatory environment surely looks like a headwind for the crypto market, but it seems like some money is moving from altcoins to Bitcoin, since Bitcoin is the only cryptocurrency that is labeled commodity by the SEC chair. Consequently, Bitcoin's market dominance is on the rise.
Right, yeah. Last year I was basically bullish on the dollar, and I think this year it's time again to be bullish on gold. I think that gold, it doesn't take much now to take out the all-time high around 2075. We might see this now in the coming few weeks or in the next 1-2 months. Usually gold has the tendency to top out in spring and then correct, let's say between March and June, July. It's usually not a time where gold and gold-related investments perform well, but gold then usually finds an important low somewhere in early midsummer, and third and fourth quarter are usually strong. So if you put this together with the technical setup, gold needs to break out above $2,050, $2,075. If it managed to do that later in the year, like really sustainably, I think we could go to $2,500 by the end of the year.
Okay.
And that's a nice return from where we are right now. Bitcoin might also see a nice recovery over the next few weeks and months, but I assume later, saying midsummer, maybe August, September, and then third, fourth quarter, we probably will see some weakness again. So that's why I'm going for gold. Gold is looking good again after those 3 months of strong rally. And as you know, in the big picture, all it takes for gold is really to take out this all-time high around $2,075. And then, yeah, we would complete a very large basing pattern, basically, that started in 2011. And you can just imagine how much energy has been compressed over the years. So I think, yeah, $5,000 to $10,000 gold is very possible. And given the macro outlook, the big picture, I think there's every day more reasons to be long-term bullish. Well, I mean, one of the main drivers for sure is the de-dollarization that is going on. So Russia are moving away from the dollar. The so-called petrodollar, which was backed by oil being factored in US dollar, that is step by step changing. You see India, for example, making payments in rubles nowadays. Chinese trying to establish the renminbi oil trade. The Saudis have basically partnered with China, and that has been a huge. I mean, I think the most important driver for the dollar still being the most important reserve currency on the planet. And I think that is going to change. And we are already in that change. This is a long-term process. It's not happening from one day to another. That takes years, probably 1 or 2 decades even. But I think that is one of the main drivers. And at the same time, 50 years into the paper money system after Nixon ended the gold standard, I mean, we all know that debts are incredibly high and unsustainable. Now we're seeing since a few years massive inflation everywhere. And I think this whole paper dollar system, is going to fail at some point. It's not happening overnight. It's a process. But I think these are the main drivers. And I don't think that the world will directly switch to renminbi or yuan.
Yes.
Because the Saudis don't trust the Chinese either or the Russians, but they want to certainly do the trade overall in gold.
In response to David Lynn question, which will be the best performing asset in 2023, Grummes replied, gold is not only a hedge against inflation and also is the best bet when there is much uncertainty on the macroeconomic front. Moreover, it adds diversity to your portfolio, which is again a major positive. The best performing precious metal for the week was gold, but still off 0.06%. U.S. gold futures rose 0.3% to $1,850.20. Higher interest rates discourage investment in non-yielding gold, although it is considered a hedge against soaring prices. Several Fed policymakers this week have signaled that more hikes were needed to bring inflation down to the central bank's 2% target. The dollar index was down 0.3% after hitting a near 6-week peak on Wednesday, making greenback-priced gold less expensive for overseas buyers. What are your thoughts on Florian Grummes' prediction that gold will be the best asset in 2023? Let us know in the comment section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.